SONIA is now becoming the benchmark reference rate for GBP issuance, both in RMBS and structured finance. However, on the asset side, focusing on new issuance first, those banks or non-banks that historically had mortgage loan products denominated in LIBOR are a little bit slow in transitioning to the next product. So if we look at alternatives, we think that the reason why they are a bit slower than expected is mainly economical. So if we think about LIBOR-denominated products switching into Bank of England base rate or SONIA, those reference rates have historically been lower. So if the lenders are able to charge higher margin on the loans, then they'll make whole. But if they can't do that, obviously they prefer to wait and see what happens. Even if they decided to switch to standard variable rate, as main high street banks do, it's probably an asset and liability management problem for them, because historically they had LIBOR denominated loans, LIBOR denominated liabilities. They will have SONIA denominated liabilities, and if they have an SVR on the assets, they have to do something. That something is going to be costly for them. For vintage transactions, we rate 60 transaction RMBS where more than 50% of the portfolio is still denominated in LIBOR. These are mainly vintage non-conforming transactions. So that the issue is twofold. One, operational, if you have to redenominate liabilities and hedges, where mostly, in most cases, the lender of record is no longer there. It's effectively down to the trustees and the note holders to agree a pattern of action, and could be time-consuming and operationally intensive. On the asset side, LIBOR-denominated products have to change. And if you look at the mortgage terms, you can change the reference rate, but you cannot change the margin. So on one end, you have assets that are potentially yielding less than before. On the other end, you have note holders demanding a make-up on the margin because their liabilities will be SONIA denominated. So it will be a bit of a chess game between note holders and lenders to